Bitcoin going up and then crashing back to 40,000 one day. And there we are today.
Why do you think Bitcoin has been unable to sustain its momentum over the past 6 months?
There's a lot of speculation about central banks pushing the price down, much like in the gold market. But I think it's much simpler than that. So that's clearly what's going on right now. We probably joked about Bitcoin going up and then crashing back to 40,000 one day. And there we are today. Bitcoin is so volatile, it gets attacked for that attribute, but with the volatility comes a return. And I guess experienced investors know that there cannot be return without volatility. But I've seen it personally with the stock to flow model and with Bitcoin now 3 times up and 3 times down, that when Bitcoin is up very much, everybody wants to buy it. And stock to flow model and plan B is the man, the myth, the legend. But when it's down and where we are today, and we experienced that in March 2020 with the COVID, when COVID first hit us, but also in March 2019, when I published the article, we were really very much down. Then it's all Bitcoin is dead and it's a bear market. It will go to zero. It seems like a black or white thing. And investors and people in general seem to forget that it's just volatility and the overall trend. If you, for example, look at the 200-week moving average, the 4-year moving average, the overall trend is going up and never goes down. If an asset is very volatile, then the chances of estimating or evaluating it very precisely are lower than if it's an asset that doesn't move very much, so like gold or actually any other asset. To try to predict or evaluate Bitcoin it must be a very rough estimation. And you're right, the stock flow model is very rough. So stock to flow is basically saying that if an asset is scarcer, it should be more valuable. And well, how do you quantify scarcity? There is a known measure, that's the stock to flow measure. It's the number of years it takes for a reserve in a certain asset to replenish that reserve. So for gold, there is 60 years of production above ground stock. And so the stock to flow ratio is 60. So the scarcer an asset, the higher the stock to flow ratio, the higher the value of that market should be. And it's a very principle-based, very intuitive thing that scarce things are more valuable. And this model very roughly, very simply as well, because it doesn't use any other input variables, any other factors to value the Bitcoin. It uses that same scarcity to value Bitcoin. So it's very rough, it's very not precise, and I guess it would not be very usable for trading more than investing. So it's really a very rough compass, if you will, for investors.
Why do you think Bitcoin has been unable to sustain its momentum over the past 6 months?
Yeah, there's a lot of stories about manipulation, about the futures ETF coming alive with all the possible manipulation around that. There's a lot of speculation about central banks pushing the price down, much like in the gold market. But I think it's much simpler than that. We saw a China miners ban halfway last year, and that wiped out half of the hash rate, half of the security of the network. That was a major thing, major structural event, macro event, you might call it even for Bitcoiners. But that wiped out half of the hash rate, and all the miners had to move and relocate their stuff to the countries around China and to America, Texas mainly. So that was the number one reason, very obvious, very clear, to impact the price of Bitcoin. And currently, obviously, a lot of tech stocks are going down. The S&P goes down, and a lot of other assets go down because there is a risk of interest rate rise. And the Fed has, spoken about tapering, about cutting back on the quantitative easing. That helped any asset increase in value if it was real estate or stocks or Bitcoin. So if they would stop, if the central banks would stop the quantitative easing, the money printing, that would certainly impact assets, as would rising interest rates, of course, influence the asset valuations negatively. But that's clearly what's going on right now. And by the way, I think they're just talking the talk and not walking the walk. They normally try to push asset prices down, the central banks, by just mentioning rate hikes. And I don't know if they're really prepared to go all the way and crash the stock market, for example. In my experience, they won't run that risk. But it will be a very interesting couple of months, and that's, I guess, the main topic right now. And a lot of tech stocks are being hammered as we speak.
We're starting to see countries, states, cities embrace Bitcoin. Why is that? And do you think that trend's going to continue?
I certainly think that trend is going to continue. And as a matter of fact, there is rumors in the market that this second country after El Salvador will adopt Bitcoin within 3 months. We don't know which country that is, or well, those rumors, we'll talk about it. And there's a lot of countries thinking about it. And well, I think it's a very smart move, to be honest. If we look at El Salvador, if you declare Bitcoin as a strategic advantage, as a technology that will help your country and your citizens, and you make it legal tender like El Salvador did, then you attract a lot of Bitcoiners, technology, brains, capital, and much in the same way that America did with the Silicon Valley. If you embrace technology like Silicon Valley did, you attract all the engineers and all the capital and venture capital, and that will bring great prosperity to your country. So I think what El Salvador did was very wise. We saw it playing out last couple of months, and El Salvador is now one of the few countries in that region that has a positive growth trend in tourism, in general economic growth. It's especially countries with a currency of their own that doesn't do very well because they made policy mistakes in the past. They printed too much money. They had too ambitious government programs that had to be financed. And so countries like Venezuela, Turkey, Brazil, Mexico would be ideal candidates to make Bitcoin legal tender like El Salvador did. And that will, I'm sure, that will bring great prosperity. And it will cut the power that the IMF has over you. So yeah, it's a risk as well, because the IMF will fight like it does with El Salvador, and it will maybe not extend your loans, and you will have some troubles there. But the money will come from different parties, from Bitcoin investors, from venture capitalists. So yeah, I think that will be the big trend of the future, and in fact, that might very well be the trigger that we need to make the next step up, the next 10x, if you will. Yeah, the early ones get all the profits, and the earlier you get in, the more profit you make. I mean. Anthony was telling about $20,000 Bitcoin the last time we spoke. I think that was about the time that your fund also started, which obviously, looking back, was a very nice entrance level that current investors cannot make, and that will be the same with countries. So I don't know what the average price level was that El Salvador started investing, but yeah, the first mover advantage is huge. And it's a difficult. It must be a very difficult decision, as it is a difficult decision for individual investors and especially for institutional investors, but certainly even more for countries. But I guess you don't have to go all in. You can, like El Salvador, also they have two legal currencies. Legal tender. It's the dollar is also usable in El Salvador. You can sort of start slowly and step up that game.